Let's talk about the biggest crypto news you need to know right now and what it means for your money. A new giant is hitting the NASDAQ, aiming to completely change how Wall Street plays with Ethereum. This isn't just another crypto company. This is a game changer. And I'm going to tell you exactly why, including one crucial detail at the very end you absolutely cannot miss. So stick around. The Ether machine is going public. We're talking about a brand new, supersized investment firm focused entirely on Ethereum. They're merging with a company called Dynamics Corporation, which is already listed on the NASDAQ. Soon, you'll see them trading under a new ticker symbol, ETHM. This whole deal is expected to close by the end of 2025. And get this, they're launching with a jaw-dropping over $1.5 billion in committed capital. That's a huge pile of cash. But it's not just cash, they're also holding over 400,000 Ether coins. This isn't small potatoes. This move is designed to create the largest publicly traded company focused exclusively on generating yield from Ethereum. They want to be the MicroStrategy of Ethereum, but with a twist. And that twist is key. I'll explain that in a moment, but first, let's get into why this is such a big deal. Why Ethereum is the digital oil. The people behind the Ether machine are calling Ether the digital oil that's powering the next era of the digital economy. Think about it. Bitcoin is often called digital gold, right? It's a store of value. But Ether, it's different. It's productive. It's like the fuel that makes the whole Web3 engine run. Ethereum's network settles over $14 trillion every year. It's the backbone for over $130 billion in stablecoins, those digital dollars you hear about. And it secures most of the activity in something called DeFi, or decentralized finance. It's programmable, it's flexible, and massive companies like BlackRock are using it. So what's the Ether machine's big plan with all this Ether? They're not just going to buy it and sit on it like a dragon guarding its treasure. No, they're calling themselves an Ether generation company. That's the crucial difference. They're going to be actively working to make more Ether for their investors. This is where it gets interesting, and it directly impacts how you should think about your own crypto investments. The three-pronged attack, how they'll make you money. The Ether machine has three main strategies to generate returns and beef up the Ethereum ecosystem. First, they want to generate alpha, which just means making really good returns. They'll do this through something called staking, restaking, and using battle-tested DeFi protocols. If you're buying Ether in an exchange or an ETF, you're getting exposure to the price of the coin. But Ether Machine believes you're missing out on the dividend that Ether can produce when it's actively managed. They'll generate yield by helping to secure the Ethereum network itself, making the network stronger and earning rewards in the process. Second, they plan to catalyze the Ethereum ecosystem. This means they're going to actively support new Ethereum projects. Think partnerships, open source contributions, and jumping into new protocols early. They'll even publish research and educational content to help everyone understand Ethereum better. It's about growing the whole pie, not just taking a slice. And third, they're going to build infrastructure solutions for big institutions and other Ethereum native projects. This is huge. Imagine a company needing to manage validators, build blocks, or create custom yield strategies on Ethereum. Instead of doing it themselves, they can use the Ether machine's services. This takes a lot of the complexity and risk out of the equation for the big players. It's all about making Ethereum easier and safer for the big money to get involved. The leadership team is packed with Ethereum pioneers, too. Andrew Keys, the co-founder and chairman, helped launch Ethereum back in the day and even co-founded a $1 billion investment pool. Their CEO, David Marin, helped Consensus, a major Ethereum software company, raise over $700 million. They've got veterans from PayPal's board and traditional finance, too. These aren't just crypto bros. These are serious finance people. Why now? The perfect storm for Ethereum. This isn't happening in a vacuum. This is a watershed moment for institutional money flowing into Ethereum. Why? Well, Ether is having a moment. It's up around 80% in just 1 month and has more than doubled in the last 3 months. Ethereum investment products have seen record inflows, pulling in over $2.1 billion recently. That's almost double the previous high. They've had 13 straight weeks of inflows, accumulating over $6.2 billion just this year, already beating last year's total. A big part of this is the improving regulatory picture in the US. President Trump just signed a major stablecoin bill, sometimes called the Genius Act. Guess what? Most of these dollar-pegged stablecoins operate on the Ethereum blockchain. So more regulatory clarity for stablecoins means more confidence in Ethereum. And big banks are noticing. You see, this isn't just about speculation anymore. It's about the financial world finally getting the green light to use Ethereum as a foundational piece of their operations. Other crypto companies are also starting to jump on this Ether treasury bandwagon, trying to replicate what MicroStrategy did with Bitcoin. Companies like BitMine, SharpLink Gaming, and BitDigital are all increasing their focus on holding and staking Ether. It's a clear trend. So here it is, the big reveal I promised. The Ether machine isn't just another company buying crypto. They are building a regulated, transparent, and actively managed way for institutions to get into Ethereum, not just as a speculative asset, but as a productive one. Think of it like this. If Bitcoin is the digital gold bar you keep in a vault, then Ether, through the Ether machine, is like a highly productive oil well that constantly pumps out more oil for you. It's not just about the price of the asset going up, it's about the asset itself generating more of itself, constantly. This signifies that Ethereum is no longer just a niche tech project or a volatile speculative play. It's being cemented as a foundational layer of the global digital economy, attracting serious institutional capital because of its ability to generate real, tangible yield and power critical financial infrastructure. This is a massive step towards mainstream adoption and legitimacy for the entire crypto space, with Ethereum leading the charge. This isn't just crypto news. This is a sign of a fundamental shift in how the world's biggest financial players view digital assets. If you found this breakdown helpful, smash that like button. Make sure to subscribe to the channel so you don't miss out on more critical insights like this. And hit that notification bell so you're always first to know when I drop a new video. Thanks for watching, and I'll see you